Hello guys, welcome to Go Capital. First of all, I want to say I'm in a very busy place, so there might be some background noise in this recording. So please just ensure you will bear with me, but I'll try to minimize the noise as much as possible. All right, I want to be showing you how I took 333% in 3 days, okay? And it's actually very simple. What you are seeing on this chart now is Volatility 101S index. It's traded only on deriv broker. So if you are not a deriv trader, you may not find this video useful, but if you are, then watch to the end. And some of you have been asking questions about fair value gap and support and resistance and the rest. You might also get a bit of understanding from this video. So what you are seeing right now on this screen is a chart of Volatility 101S index, and this is the 1 hour time frame. Okay, so and I want to show you that it is real, it is true. You can do this, and we just began an awareness of 1000 challenge, the 1000 challenge. So this is how we are going to be approaching it as well. So the month of September began from here. September began from this particular time period. Okay, so this is September 1st. Are you seeing it here under? All right, so the whole of this place is September 1st, then this is September 2nd, and this is September 3rd. Now I didn't trade yesterday Sunday because I was busy, and I have not also traded today because I'm at work, and I've not had time to look at the chart. I slept throughout the night as well, so if not, I would have taken this trade. Yes, I would have taken it. I'm not nice words, I would have taken it. So I will tell you why I said so. Now let's look at September 1st. Let's begin from here. This is September 1st began. I took a trade here on a buy. Are you seeing this arrow? I took a trade and I got stopped out at break even. Market went up after I took the trade, went up to this level and came back down and stopped me out on break even. That's why you see this red arrow here facing down. So I entered again immediately, because I knew that place is a key point for me to enter the market. Why did I still enter even though it has taken me out? Because I knew something that you don't know, which if you watch to the end of the video you are going to understand. All right, so then I entered this second trade here. When I entered, it ran all the way to this point and hit my take profit, and I was out. Okay, it came down immediately, it hit my take profit. If after I took this profit and I was still in the market, I would have taken this move again. Now you will tell me nobody does that. Just watch this video to the end. You will see how you can do this. But I was not on this one, okay? Because whenever I trade a day and I take the profit for that day, I walk away. So if I stay in the chart throughout the day, I will take almost all the move. Not all of them, but almost all of them. So the second day, which is on the 2nd, the market came here again, and there's something I saw which I will still show to you at the end of the video. So, and I entered the buy here and it moved all the way to this place and I take my profit. I took my profit. This is a small account I'm trying to grow. So all of this movement you are seeing here is equal to $5 actually. Okay, I'm growing a very small account, right? An account of $8 today is sitting on $27, right? In 3 days, okay? Now, and I'm not using exorbitant lot size. If you look at this thing very well, I don't know if you can pause the video, you will see that I'm buying this at 0.1 lot size, right? That's the lowest lot size on this 101S, and I'm taking this amount of money. Now, this same movement can give you $50, can give you 500, can give you 5,000, can give you 50,000, depending on the lot size. Okay, but I'm growing a small account, and consistency is what that matters. So when I took profit for that day, it was in the midnight. I was supposed to relax, but throughout the day there was nothing to do again. I was bored. like I was bored. I came back to the chart and I entered a trade here on a buy. So this one failed because it stopped me out below, right? It hit my stop loss. Now you are wondering, stop loss is this small? Yes, my stop loss is always very small like this, because the strategy will give you very precise entries that if it is wrong, you know you should just walk away. So the stop loss was small, so it stopped me out. But after it stopped me out here, what happened? It began to rally back up again. So if my stop loss was wider, I would have also taken this profit. But I wasn't there to monitor it. It stopped me out and I didn't come back on time to check. If I had come back on time to check, I would have found another entry to join this buy. But that was it. So I made $5 here, I lost $1 here. All right. So then the following day, which is the third day, September 3rd, are you seeing it here now? I entered this trade here again and I took profit here. Now let me show you something. Have you noticed that the point where I'm taking profit is the point the market turns? Now let me show it to you. I took profit here on the first, market turned after I took my profit. I took profit here on the second, market turned after I took my profit. Now this is the third day. I took profit here on the third, market turned after I took my profit. How did I know that the market will turn there? You will learn all these things. It's very simple, like very, very simple. And if you know this, you can hit your profit every single day, and with patience you will not lose. Now after I hit my first profit for the third day, I came back again to the market immediately to enter a buy here. Then it stopped me out. It went up, I was in profit, I was happy. It has not hit my TP, came back and stopped me out. It was so painful, but I was not in a loss. Okay, so that's why you're saying the red button is above, the red arrow is above the blue. So then I entered another buy here again. It went up again. I was happy that this one was correct, so I moved to break even. It came back and stopped me out. Then when that happened, I know I should not buy at this junction again. The market is at the top, so it came back down to this place where I entered before, and I re-entered the buy here. So I took a second buy on the third day and hit profit for the second time for that day. Immediately I closed my trade here. What happened? The market turned. Now the question is, what am I seeing that I will just close, and just about the point I close, the market will turn? Why? And why am I entering trade with very tight stop loss and they will go where? Why? Now it's time to explain what you are saying. This is not made up. It's not made up. If this market comes back up here now, I'm going to take a trade on a sell. Now I will show you all of this. Let me reduce the zoom level. Okay, I hope you can see the chart clearly. Now I said before that when market moves, let me remove all this, the trade history. All right, so I've removed the trade history. So you can see I did this thing. This is live. This is my real account. So this is trade history. When I click it, all this arrow will come up. If I right click again and I click trade history, everything will disappear. So I'm not editing this. All right, so let me show you something. Whenever market moves and closes, then it will form another candle and also close. Now there are three candles here. The first red candle, the second candle blue, and the third candle. Now what you will notice is when this third candle started, the low of it came to touch the high of the previous, of the first one. It is called the power of 3. So the third candle must touch the first one. That is the one before the second. So they must touch, the low of this one must touch the high of this one. So this one actually entered, this one entered into it very well. Let me remove these period separators. All right, so this low here touched this candle is here. Then this candle now went up, then closed. This next candle, which is red that formed, was supposed to come back to touch this particular candle here. The high of this other one. It was supposed to come all the way down to touch it. That is how price is delivered efficiently in the market. Price must touch, it must overlap. it is called proper price delivery. Okay, that's the way price is delivered. So each of the candles must touch. The third must touch the first. The third must touch the first. Whether it's in a buy trend or a sell trend, it's the same thing. So, but in this case now, there was no touch. There's a gap between these candles high and this other candles low. There's a gap. This gap is what you call a fair value gap. Are you getting me? So this gap is what you call a fair value gap. Very, very simple. Okay, so the idea or the concept is that price must come back into that fair value gap, or at least touch this price before going back up. So your own is to be waiting for buy setups on a lower time frame in this area. That's how you look for those buy setups have been taken. Very precise entries. So now this particular one, let me show. Are you seeing this one here now? Market moved, closed, moved again, closed, and this is a third candle. Now you can take any three candles, any three, any color, it does not matter. So now the low of this candle did not touch the high of this first one. So there's a gap here. Are you seeing it? Sorry, let me mark it for you. There's a gap here. That gap is what you call fair value gap. Price must come back into it. Are you not seeing it? It always happens. Price must come back into the fair value gap. So price must touch one another. It must be delivered efficiently. That is how price moves. Now, but know that you must establish the trend. You must have known the trend. You must have known that the market is buying or selling, so you will know the direction to look for your fair value gap. You don't just come and start looking for fair value gaps anyhow. Okay, so this is how you look for areas to buy the market, right? Am I communicating? So this particular candle you are seeing here, there is no fair value gap here, but if you go to a lower time frame, you will see a fair value gap that caused this market to buy from here. Yes, you will see it. So, and let me put the history again. This was where I took my first buy. Are you seeing it? Because I knew there's a fair value gap here, so I entered a buy. Are you seeing it? Very simple. And it's also market coming back to a previous high that was broken. It's the same strategy I've been teaching since. Market came back here and touched this high and started buying. But it's not just buy because it touched the high. There's a fair value gap here, which is my second confirmation. All right, so I entered this trade and I bought. The same thing I saw here, I saw it here also on a smaller time frame, and I entered a buy here and I took my profit here. All of this that you have been saying is because there's a fair value gap in these areas. All right, so let me remove the history again. So now here, why did this market sell from here? Because there's a fair value gap here. Are you seeing the fair value gap? There is a fair value gap here. The market dropped down 3 candles. This one, the low, the high of it did not touch the low of this one that was here, right? So there's a fair value gap here. The market came back into it and sold. That's how you take trades on this 101x. And I'm not going to be teaching this on any other asset because this is what we'll be doing from September 15th. So if you're interested, join the channel and let's do this together. Sorry guys, there was a little break. I was called upon by my boss, so I had to walk away and I'm back. So now between that time and now, the market has gone down. Can you see? It has moved down from where it was to this place. So the reason why it moved down from here, we are going to see it now. So let me just put a line here and keep drawing it this way and show you why it dropped down from that place. Okay. Are you seeing this? This block here, this is the reason why it dropped down from that place. Now, I may not be able to sell this type because it's not every time you will know where the market will sell. I must be frank with you. But I would have waited till it got here, this particular point. Since it didn't get here, and it didn't also get here, The next thing to wait for is to wait for it to break this one, this low here. So let's track this low. Let's track it. Here price is currently. Break this low. Are you seeing fair value gap here? Are you seeing it? That's a fair value gap. That was why the market turned up a little. Are you seeing the fair value gap here? Can you see? That's it. There's a gap between this candle and this candle. This is a fair value gap that the market, let me draw it to the side so you can see. That's the gap the market respected here. Are you seeing it now? That's a gap the market respected. So once this market break, if this gap does not hold again, because I told you I trade, you will look at this thing and go to a lower time frame and look for an entry. So I would have bought this trade in a lower time frame, maybe like 5 minutes time frame, 15 minutes time frame. But it's not every time you have to be in every trade. It's not every time you have to be in every trade. So if you could not buy, then wait for this market to break down. Once it breaks down, okay, once this market breaks this level down, sorry, let me look for my drawing tools. So once it breaks down like this, wait for it to come back here and you join the sell instant. Okay, that's what you do. Now, how do you put your stop loss? How do you put the entry? The entry goes to the wick of the previous of the opposite candle. That's where the entry goes to. The stop loss is just above it. Okay, now you don't have to use this very wide stop loss. That is why you go to a lower time frame. Are you with me now? That's why you do what? You go to a lower time frame. So let me clear this drawing. I will show you where the TP will be, but let me clear this drawing first of all. Let me clear all these drawings. All right, so now let's look at this properly. This is where stop loss will be. Are you with me? And this is where entry will be. So, but this is too wide. What will I do? I will go to a lower time frame. But before we go to a lower time frame, let's look for the TP first of all. All right. So in order to look for the TP, this is where our TP is going to be. This red line here. This is our TP. Okay, or maybe here. But sometimes I just go for 1:2. Depending on the stop loss, I just go for 1:2. That's what I do. It's not a short time. That's what I do always. So now let's look at a lower time frame, like the 15 minutes. And go to the end. All right. So now the market is acting like it is pushing up again, right? Like it is pushing up, and it might just push up to this point. If the sell is strong, it might just push up to that point and start selling. So here become a precise entry, very precise entry for me to join the sell. But also, well, I won't join the sell here. Yeah, I won't join the sell here. Yes, I will wait for you to break this red line, this box down, and come back. So here now becomes my stop loss. Sorry, my new stop loss becomes this one. That becomes my new stop loss. Is that not easy? So now you look at it, you measure from here to here, and target ×2 of that move. Very simple. In less than 1 hour, sometimes 2 hours, you are done trading for the day. So that's how you know the entry, the stop loss, and the take profit. Are you with me now? So this market, if it breaks, which of course is likely to, which I'm thinking it will do, why? Let's go to a daily time frame and see how this market has been doing. What do you see? This market has been selling. Let me clear all of this. I actually needed all this line, so God. All right, let me just clear all of them because of you. Yeah, let me clear them. All right, so you can see the market has been selling. This is a daily time frame. This is over a month. Market has been selling from this particular point, which happened to be the month of July. that we started from that point till now. Are you seeing that? So the market may likely to continue the sell, and it might sell to that sell up till it gets to this level. Up till it gets to this level. Okay, so that's the level we saw as the TP the other time on the 1 hour time frame. So this is where the market will drop down to. Why is it doing so? There's a fair value gap here. Are you seeing the fair value gap? Yes, there's a fair value gap. Let me zoom for you to see. There's a gap between this candle and this candle. So the market will come and feel it. All right. So this is how you know TP, stop loss, and the entry. Okay. So the market will continue to sell. Maybe today, maybe not, but you have to observe to continue to sell downwards. It's simply a trend trading strategy. You identify the trend and you spot fair value gap or a good order block or mitigation block and a trade. Now all these things I just mentioned, now please don't ask me to explain them. I've explained them in this channel over and over. Okay, watch all the videos. I can't tell which of the videos again because they're already becoming too many. Remember what I'm doing now. I'm not a YouTuber, like you get. I'm a trader, but some persons requested for all these things I'm doing here, and I'm doing it for free for you guys. All right, so don't be lazy. Don't make me to keep repeating myself. I actually have no other business doing videos again. Why? I have finished what I want to teach people. Any other thing apart from this is just repetition of myself, or maybe an advice or mentorship you get. So you have to keep watching the videos. If you have not watched them, go from the beginning of the channel to the end. We started barely 3 months ago, 4 months ago. You should be able to cover up. Okay, just go over the videos and watch them again and again. You will understand. All right, with this said and done, I want to plead with you, subscribe to the channel, like the video, comment, share with your friends, and yeah, let's make money together. See you next time.